Welcome back to the Dividend Diplomat YouTube channel. You got your boys here, Lanny and Bert. The Dividend Diplomat. Sure, everybody, the stock market has continued to rise. It just keeps getting pushed up higher and higher, but that's not going to stop us from finding undervalued dividend stocks to buy. And that's exactly what we're going to talk about here in this video. I found two dividend stocks in my portfolio that are still showing signs of undervaluation despite all of that green in the S&P 500.
All that green in the S&P. But guys, smash that subscribe button. Give Bert and Lanny a nice thumbs up here, guys. Let's get to 19,000 subscribers. Let's blaze the trails here from two kids from Northeast Ohio, guys. So Bert, two stocks here. One's a Dividend Aristocrat. One, we'll have to see about what their dividend growth past future looks like. But they have increased their dividend recently for a few years.
That's right.
You own both of these stocks as well, right?
That's right. My wife's portfolio is going to have the first one we're going to feature, and my portfolio is going to have the second one we're going to be featuring here today.
Both both stocks, one that you've probably have heard of, one that you've heard of maybe in the dividend investing world, or at least on our channel.
Yeah.
So Bert, as the market's hitting almost 4,600, or maybe at the time of this video being out there, maybe we're over 4,600. We hope not, though, as dividend
Yeah.
investors.
And Bitcoin's probably going to be at 50,000 by the time this video hits, because I mean, it's been a fun ride to follow over there, seeing what's going on with what Bitcoin, Ethereum, and all those great coins just shooting through the freaking roof.
Yeah, no kidding. Yeah, at the time
Yes.
of this video, Bitcoin's at 40,200 and Ethereum's over 2,200 right
That's
now.
That's gross. Okay, so here's what we're going to do. We're going to talk about these two companies here. The first one, Medtronic, ticker symbol MDT. Featured this
Yeah,
a few weeks ago. This was one of my top stock picks of the week. I grabbed it during the week, and thank goodness I did, because I picked up 5 shares right before earnings. And when after earnings hit, the stock popped up. Medtronic is up nearly 9% over the last month. So what happened with their earnings release? It was just
what
positive news all
happened?
around. They just
What happened?
strong increase, year-over-year increases for revenue, year-over-year increases for earnings, strong percentage growth in a sector that is facing some tough growth, facing some cost cutting. And when a lot of the other ones were failing, Medtronic came through and delivered. Then on top of that, they also raised their guidance. So we had some positive outlook here. So you had positive top line, positive bottom line, then positive forward outlook change. That is the trifecta. You betcha. We're not talking about your Vanguard trifecta. This is the earnings trifecta right there for Medtronic. And boy, oh boy, did they deliver.
They delivered, Bert. They delivered. Raising outlook, which is a rarity right now with companies, guys, as they've been battling, obviously a huge inflated cost, as well as higher borrowing rates, which introduces more costs to companies, financial statements, guys. So raising the outlook from this dividend aristocrat is really nice to see, guys. Still hanging below $80, guys. So we're going to run MDT Medtronic through the Dividend Diplomat Stock Screener, which is focused on three dividend stock screening metrics. That price to earnings ratio less than the S&P 500, two, that dividend payout ratio less than 60%, three, a history of growing net dividend and hopefully at a strong rate. Then we'll look at that dividend yield. So Bert, trading below $80, Medtronic, MDT, we also own it in my wife's account. So I'm very excited to see what these metrics look like. What's analyst expectations? Hit them with the PE.
All right, their price is $79.99. Forward earnings are $5.16 at the PE ratio of 15.5. Not the cheapest out there, but definitely a discount to the S&P 500, which is exactly what we look for in that first metric.
Yeah, I mean, the S&P 500's P ratio is right around 25 right now. So as that stock market shot up, obviously the PE ratio will go along with it, guys. But that payout ratio, man, is
Perfect.
looking so sweet.
Yeah, it's perfect. The payout ratio is 53% when you factor in that $2.76 annual dividend, right in the sweet spot of our 40 to 60% perfect dividend payout ratio range. They've been having some solid dividend growth too. Their 5-year dividend growth rate is 7.37%, and they have increased that dividend for 45 years. So yes, they are very, very, very close to becoming a dividend king.
Now, the growth rate might be over 7%, but the last one was about 1.5%, just 1 penny of an
Really
increase from
bad.
68.
No.
Yeah. Now, again, that's why we look at the average. So hopefully then maybe we have a few low years, but we get back to some of those higher dividend growth rate years from MDT. Now that the stock price has kind of, I guess, remained flat for the majority of this year, up 2% year to date, up 1.5% since last year. Yield has stayed fairly consistent despite even a small increase, but dividend yields at 3.45%.
Beautiful. So yeah, I said they were up 9% over the last month. Year to date, they're now up 2.21%. Last year, they're over 52 weeks, 1.52%. But over the last 5 years, they are down 15.12%. So that's Medtronic, everybody. We're going to flash all the metrics here. The first dividend stock on our watch list. I think it's time, Chico, to move into that second company. What do you think?
Yo, we're gonna go on the corner of not happy, not healthy, not Walgreens, but CVS Health or CVS Pharmacy, ticker symbol CVS. I own 96 plus shares, but this is Bert's two
Yeah,
stocks that he's watching right now. So Bert,
maybe.
CVS throwing a curveball here.
Yeah, I mean, it's been a long time since I've considered them. They're very close to their 52-week low, which is around like 64 and a half. So they continue to stay depressed in this rising market. But when you look back at their earnings, I mean, I joked with you before, right before we hit the record button here on this video. You forget how high CVS's revenue is, and that's what really came out in their last earnings release. They earned 89.9 billion of revenue, and that was an 11% year over year growth rate. I mean, over half of that's from Aetna. So they had $6.9 billion from Aetna revenue, or that division that houses Aetna
I
in
did
it.
not even realize that that's what's
Yeah.
wow.
Yeah. So they're a powerhouse. So you're starting to see the power, the fruits from that big Aetna acquisition a few years ago that stalled dividend growth for CVS.
Jeez. Okay.
Yeah.
And they have some solid earnings to boot. They lowered the outlook though to the $6.37 to $6.61.
But
But the
now,
non-GAAP EPS has stayed very similar.
yeah, so that's what it is. You have some one-time pops that need to get pulled out of there so you can get that EPS reflective of the forward earnings expectations for management.
Yeah, the true earning power, guys. But let's look at this stock, $68.48. Analysts are expecting $8.58 on a non-GAAP standpoint. That PE ratio is pretty much half of what MDT was at 8.
Yeah,
Whoa.
that's a third of the market. At the because you said the
It's
market was
true.
right at 25, so it's a third of the market at 8. Let's look at that payout ratio. Their annual dividends $2.42. That payout ratio is 28.21%. Very, very low, and plenty of room to keep growing that dividend going forward. So you want to talk about that history here for a second, Lanny?
Yeah, so the during the Aetna and Bert mentioned it, they paused that dividend growth for a few years. They have resumed it. But if we take a look at the track record or history of CVS, obviously, there's been a lot of discussion within the prescription arena and what Amazon, is doing. So, you know, we should we should be seeing an increase within the next 2 weeks from CVS or a dividend announcement. Let me say that. But they've had 2 years of dividend growth increases in a row, one from 50 to 55, and then another 10% from 55 to 60 and a half cents. So the last 2 years have been 10% dividend growth rates. So the question is do we get one here in 2 weeks?
Right, and that's what I always remember about that acquisition. But they were pretty transparent. They were going to halt dividend growth. They kept the dividend the same. They were going to halt that growth for a few years until they got their balance sheet corrected, until they got comfortable to the point where they felt like they could start increasing again. And before that acquisition, CVS had started developing a nice dividend growth history. So we'll see in a few weeks, to your point, Lanny, are they going to get back to that rich dividend growth history that they once had?
We will find out soon enough, guys. And actually, let's take a pause. Do you guys think CVS will increase the dividend? Drop your feedback, your guess below here in the comments.
Yeah. And now their yield is above 3.5%. It's 3.53%. So very, very solid yield for CVS.
Oh, yeah, down 3.5+% the last month. down 26% this year, down 33% since this time last year, down 8% in the last 5 years as well. So, most of this rough pattern has been as of recent,
Yeah.
the last essentially 52 weeks.
Yeah, so that's my watch list here. You have Medtronic and CVS. We're gonna have the chart up there with both of them. Honestly, both are great. I have no complaints for either one of them. I can see at these valuations of grabbing one share of each. I have no problem with that right now. Grabbing two great stocks at about 3.5% yields to complement my ETF purchases. Why not?
Hey, tomato. What do you
Yeah.
guys think of both of these stocks? Would you buy MDT and CVS at current prices? What other stocks to buy are out there on your stock watch list, guys? Keep us posted here in the comments.
Yeah, if you haven't already, subscribe to the channel. Give this video a thumbs up. And remember, if you're not with us, you're against us, Jack.
That was Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.